Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to do a weekly check-in on my portfolio. We're going to be looking at our margin maintenance. We're going to be looking at our margin amounts. We are going to look if we're in a safe margin amount, and we're going to look at how the income holdings are performing. So without further ado, let's get started. So this is my Robinhood account. Total portfolio value, $142,000. Currently, the market is still open. It is 1:13 p.m. So obviously this will fluctuate, but looks like we're up 1.5%. In my portfolio, I own Tesla, I own QQQ, TSLY, and QQQY. These two are the income holdings that I use to produce income. So what I do is these two, well, majority Tesla is the base, and I'm trying to create that as the second foundational base. And what I do is I borrow against these two to purchase these income holdings, which ultimately pay down the margin and create a side stream of income without using my own money. So I haven't really put in any of my own money into these, and we're building that side stream of income. So you can see here we're up 1.52%. SPY is down, QQQ is down, and then it looks like Tesla and TSLY are performing well, as well as the QQQY. So just from a daily standpoint, we are outperforming the market, but obviously one day is not a good indicator. If you look at the last week, you can see my portfolio is finally starting to trend in the right direction. Last couple weeks, last couple months, Tesla has been taking an absolute beating, but at some point it will recover and it will go back up. So just kind of overall, we're doing okay. Scrolling down, you can see here that the margin risk is low. We have an $80,000 buffer, or about 56.85% before I get margin called. Looking at some of these metrics, I have Robinhood Gold, which I pay $5 a month to have, which allows me to borrow money at an 8% interest rate, which comes out to the amount borrowed about $3.64. Okay. Looking through my account here, you can see my total equity position, $142,000, and then margin use, $17,521. So that $3 and whatnot change that is charged every single day to borrow this money, that's for this money. So you can see here, I'm only borrowing about 11% of my overall portfolio. My goal is 10%, but because the Tesla share price dropped so rapidly that it didn't stay in line with what I want to keep it. But you know, that 10% is more of a guide than an absolute figure. I'm not going to be selling my margin position just because I'm increasing my position, my margin amount more than 1% than I'm comfortable with. As you can see here, my different types of holdings and my two income funds. QQQ is doing well and QQQY is doing well, and then TSLY and Yieldmax are the ones that are dragging the portfolio. But once Tesla starts performing well, the share price of Tesla will go up. Therefore, the premiums will go up for TSLY, and then we'll get much more payments here. So continuing on, my margin use, I use about $17,500 margin. My margin maintenance here, which is a very important number, is $61,000. Okay. So the reason this number is really important is if you borrow money, if your portfolio value goes at this level or below, you get something called margin call. Now, it's not a very pretty situation. What ends up happening is your broker will sell whatever holdings you have to cover the margin amount. And usually you're going to be selling at a loss, and then so it magnifies your losses. So one of the things you do to combat that is to invest in high quality holdings, as well as limiting the total amount of margin used. So $17,500 is only 11% of my overall portfolio, which is a very nominal amount. So, you know, if the share price of certain holdings go down, I still have room where I wouldn't be margin called. Moving on, since my last video, nothing necessarily has really changed for some of these things, but sometimes things look better in a spreadsheet. So my total different income positions are $27,000. 17,000 of that is in margin. So about $10,000 is not a margin. So I'm slowly starting to get to the point where 50% of the amount of money I invested is now, or 50% of the margin amount has purchased actual holdings without being marginable, if that makes any sense. So, you know, once it's at this 50% mark, I'll be a lot more comfortable. And then again, you know, the next payment for the Yieldmax and defiance won't be until possibly in 2 weeks, 3 weeks. So, you know, we're going to be making a video for that. But for the most part, you know, the portfolio is in a very safe amount of margin. We're doing okay overall. So, you know, state of affairs pretty good.